This is Mark Anthony with Mercury Time Price Analytics, and this is our tutorial video for our bonds and crude oil subscribers. So on the live chart, there are 4 panels, 2 for bonds and 2 for crude. And in the top panel, you'll see the March contract at that time this is recording. The March contract will have the day trading algo, and right below that is the continuous contract that shows the swing trading algo. Day trading algo, of course, moves faster, triggers sooner, and the swing trading algo is slowed down so it catches bigger moves. Now, one of the reasons that this algo works so well is that it gets you in when you've got changes in momentum from up to down or down to up, and it gets you in the trade at the precise moment that volatility is compressed as much as it's going to relative to that particular moment in time, and then the vol expands in the direction of the trade. So if the momentum is going down and the momentum line turns back up, shortly thereafter the volatility bands will cross through, and when they cross through they'll be very, very, very compressed, and then when that trade triggers they'll release and they'll expand in the direction of the trade. So if you're long, that volatility is going to expand, pushing price higher. If you're short, the vol is going to expand, pushing price lower. So I want to show you just a wide angle, and then we'll dig in more closely to show you the way the triggering mechanism works. So what you've got right here, the cyan line is our proprietary momentum algo. It looks like any other moving average that you might have used. We designed it for simplicity to look that way because everybody is used to using moving averages. But this is a momentum algo. And so when this algo changes direction from down to up, from up to down, or when it's going sideways, it transitions either up or transitions down. Well, that's the change in momentum you're looking for. It doesn't have to be a big swing from up to down or big swing from down to up. When you've got a market that's consolidating, at some point it's going to either start going higher or start going lower. So the first step is a change in direction in this momentum line. Again, either from momentum going down to reversing back up, it'll be shaped like a U, or if it's going up and it curves and rolls over and goes down, it'll be shaped like an inverted U, or times where it's basically going sideways and then it starts turning back up and then you get the next leg of the move. So there's 2 steps to the process, and that's another reason why this is so accurate. Because just a change in momentum, all it does is puts the system into the ready state. The actual entry, the trigger, doesn't occur until the volatility dashes, which are these little white dashes, they cross up and through. So let's take a little bit closer look. Let me zoom this in a little bit. And we can use any of these examples. We'll just use this one right here. So volatility is, the momentum line is curving down. And then it hits the bottom and turns back up. Now that's not enough to get you in a trade, because we want to get in the trade at the precise moment that vol is as compressed as it's going to be relative to what it was previously. That's the vol relativity I'm talking about. The absolute vol doesn't matter. You just want vol to be compressed when you get in and expand in the direction of the trade after you get in. So when the cyan momentum algo is going down in this example, these little white dashes, and there's 2 on every price bar, okay? So all you're looking at is the change in the width on each bar of these white dashes. So when you get momentum going down as far as it's going to go and it turns back up, that happens first. Now while it was going down, notice that these white dashes were underneath it. When momentum is going up, the white dashes are going to be above it. So here's the transition. You get a change in the momentum line, the cyan line, from down to up. Once you get that change in direction, that alerts you that the system is now in the ready state. The entry is the first bar when these little white volatility dashes cross up and through, in the case of a long. Now notice what happened when this was coming down here. I mean, this wasn't a big move down, but you can see that these volatility dashes got very wide compared to what they were here. And so as they get, they start to turn back up, as they get closer and closer to crossing up and through the momentum line, notice how close they get to the point where right here, it looks like one single line. They've completely meshed together. And that's what this will do at the point that the trade is triggered. Now, once that goes through, what happens to the little dashes? They start getting farther and farther and farther apart as vol is expanding and in the direction of momentum, and that pushes price up. And in this case, this long was triggered, eyeballing it, 155.18, and goes all the way up here to 157.02, 03, and that's the first leg of the move. Then when the momentum line starts going sideways, well, that's the consolidation phase. And so what will happen with these little white dashes, the volatility dashes, is they'll start to compress and compress and compress and snug right into the momentum line, but notice they didn't go through. And as momentum gradually starts to turn back up again, then right at the point, and you can see where it took out this little area right in here, then boom, it pops, momentum expands rapidly higher, and so does volatility. Now this trade that was entered down here, 55.15, 55.17, it stayed long all the way up until it flipped short at 57.25. I've never seen an oscillator that works in my life. The reason this works is because it's not a price oscillator. This entire system is built on time. If you've ever studied any of W.D. Gann's work, this is built on time, plain and simple. So when does it roll over and transition from a long to a short? When that trade is cooked, when it's ready from a time perspective. And so when you get little jogs down, this move down in price from here to here didn't take it out of the trade. If this was a price oscillator, it would have flipped short somewhere in here, and then it would have flipped long in here, and then short in here, and long in, and all it does is chop you up. But because this system is built predominantly on time, not price, these little jogs down in price that tend to whip people out before the real move comes, don't whip this system out. So let's go over here to the swing trading system. And because this is designed for swing trading, it takes longer to trigger. The time mathematics in this are exactly the same. If you've ever done any study of Hurst cycles, Charles Angus Hurst, Australian mathematician, if you've ever done any work on Hurst cycles, imagine what would happen if you took the mathematical perfection of Hurst cycles and combined it with W.D. Gann's time mechanics. Well, that's what you got here. And so when this thing triggers a swing long or short, you can see what happened here. Went short here, did not get out. Even in this choppiness, it did not get out of the short. It stayed in the short position until ultimately the trade was cooked and momentum started to turn up. That puts it into the ready state, and then your entry is not triggered until the volatility bands cross back up and through in the direction that momentum had changed. And that's it. It's literally that simple. There is heavy-duty, very complex math that underlies this system, but one of the reasons traders love it so much is we made the user interface so easy. I mean, you can literally teach a youngster to do this. Okay, is there a change in the direction of the momentum line from either down to up to down, or if it's going sideways, it starts to go up or down. That's the ready criteria. Then the entry criteria is after that happens, the change from down to up to down, or sideways to moving directionally, either up or down. Then you get the crossover. From under, up and through is long, and from above, down and through is short. You know, I wish I could tell you that this was complex. Again, the math that underlies it is very complex, and there are things in this that aren't in any other system. You have to take my word for that, and that's why we give you a free trial. I will put this system up against any algorithm anywhere, institutional, otherwise, period, end of story. There is nothing that performs like this. You know, once in a while, you're going to get days of chop, but the the swing algo is tuned so that it doesn't chop. It smoothly transitions from long, you can see that here, to short, to long, and then boom, easy. So if you're using, needless to say, if you're using the day trading algo, it's going to be more volatile. And there are going to be times where it's going to flip intraday. Now, it's still very accurate because the original version of this was a little bit too sensitive. So we had to adjust the time mechanics of it. And this is as close a perfect combination for day traders of filtering out the false signals and keeping you in the real move and not even getting chopped out in this kind of nonsense. And so here you've got a day trading oscillator that was in a trade for 2 days. That doesn't happen because day trade algos are typically way too sensitive and they chop in and out, up and down, long and short throughout the day. Even this trades bonds like nothing I have ever seen. And I'm showing you this on bonds because, you know, bonds tend to turn faster. It works no differently on crude. It's the exact same thing. Now, switching over to crude, the other piece of this is you've got this single daily bull-bear pivot. This is a pure time algorithm that we run in the morning. We get it out to our subscribers right around 8 o'clock. And this is this is sort of the Lord of the Rings pivot. One pivot to rule them all. Because I've never seen a pivot that does this. You can trade off this single daily bull-bear pivot all day long. And you will be blown away by how many times a day price comes down within a tick. Now, we update this every morning, so this is the daily bull-bear pivot for crude on January 15th. But if we zoom in, I mean, here, just take a look at today. It broke down from here, triggered short, came right back up to the daily bull bear pivot, came down, came back up again to the daily bull bear pivot, and you can see that the system triggered long right here. And I'll give you an example. This video is being recorded on January 15th. If you trade ES, last Tuesday, our ES algo triggered short at 32.51.50. I remember most of these triggers to the tick. It was short from bell to bell. It stayed short into the RTH close. Then remember what happened January 7th when Globex opened? It went down to 32.26. 32.26 that day was our proprietary acceleration pivot. When 32.26 broke, you got that very fast move down below 3,200. It stopped, and just for a brief moment, it stopped exactly at 31.96. That was our extension pivot that we put out we put out a couple hours beforehand, because what we do, not to get off subject, but on ES, we have a set of pivots that we put out in the morning before RTH that are more granular. And then we have a set of pivots we put out after the RTH close that has a multi-day, multi-week look back. And those run all throughout Globex that night and the entire day session the next day. So those are calculated based on RTH close data. We put that out, those levels, before Globex opened. And remember, RTH closed around 32.30, 32.31. You got that move down to 31.96. That's where lower extension number 1 was for Globex that night. And then you had about a 9-handle ramp up to 32.05.06. And then immediately it reversed, went down through the 31.96, stopped right around 31.80. That's where lower extension number 2 was. So I had traders that were literally taking off a portion of their position on the initial move down to 31.96 and then closing their trade within a handle or two of that 31.80 when we were in that trade from 32.50, 150. There's a reason that people to this day are fascinated with WD Gann. It's because of time. He cracked the time code. I'm not in any way comparing myself to WD Gann, but I promise you, the same mechanics that are in Gann's work are what you're looking at on these charts. And the reason that we give the free trial is because you have to see it to believe it. So that's how it works. I'm sure you're going to have more questions. With the live chart, again, on the left side, you've got an upper pane and a lower pane. In the live chart, it's in fours. So on the left-hand side, you've got the bond day trading algo. Below that, the bond swing trading algo. On the right, you've got the crude. At the top right, you've got the crude day trading algo, and you've got the crude swing trading algo. And what I love about this system is if this did nothing more than give you the single daily bull pair pivot, well, okay, fine. You'd be short here, and you'd be looking to get, and you know, you could have taken profits down here, but it will revert back to the single daily bull bear pivot. It does it on ES, it does it on NQ, it does it on Apple, Microsoft, SPY, bonds, crude. So this is just a beautiful combination of Hurst cycles and WD Gann that just simply does not exist anywhere else. So if you have any questions, you can email me, Mark Anthony at mercurysignals.com. That's Mark Anthony at mercurysignals, that's signals with an S.com. And we have a Slack channel that you can post messages to. I provide commentary, charts, analysis throughout the day. And the combination of the Slack channel and the live chart is just a great way to trade. I mean, with the technology that's available, you know, everybody that subscribes to either our ES service, or in this case, we're talking about our bonds, crude platform, everybody sees the live chart in real time, and everybody's access to the Slack channel. So it's just a great way to trade. But I think that you'll find that there is nothing more precise consistently than these systems. We really do appreciate you taking the time to watch this. We understand that even if you're in a free trial, there is an investment in your time to learn how this works. And whether you stay or whether you go, we really do appreciate that investment in your time. And with that, we're going to close up the video. God bless you. God bless your family. And we hope to see you soon.